Hi, welcome. Thanks for watching and I appreciate you being here. Today's video is about Invest for American Express by Vanguard. This is a new product offering from two American called Classics that was announced just a few days ago, and I wanted to take the opportunity to chat about it for a moment. In this video, I'm going to go over the background of the two companies, how the Invest product works, advantages and disadvantages of the product, my summary, and some warnings that I noticed in the fine print that you might want to pay attention to. And of course, like I usually do at the end, I'm going to leave you some links and some resources so you can read up on it for yourself. But first, here's a little bit about me. Hi, welcome to my channel. Thank you for watching. Here's a little bit about me. My household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. We live in a high cost of living city in the Northeast. My husband and I both went to graduate school, but fortunately, we no longer have student loan debt. I work in banking and he works in aviation. I take care of the family's finances and I love my role as the self-appointed CFO. I love to talk about all things money, whether it's investing, saving, or making money. I look forward to sharing a wealth building journey with you. I look forward to getting to know you, and I hope you enjoyed this video. A few days ago, Vanguard and American Express announced a joint venture where Vanguard would begin offering investment advisor services for qualifying American Express members. Vanguard was founded in 1975 in Pennsylvania by Jack Bogle, and he popularized the low-fee index fund investing. Vanguard is a really popular investment advising company and brokerage account for people in the FIRE community and people in the personal finance community, specifically because of those low fees that I mentioned. American Express was founded in 1850 as an express mail company, and it expanded in 1857 into financial services. These days, they are mostly known for their charge cards, the first of which was launched in 1958. But this is not American Express's first relationship with investment companies. I don't know if you're aware of this, but they are Charles Schwab branded American Express Investor and Platinum charge cards. Here's how the product works. First, you get access to Vanguard's personal advisor services, as well as a free initial 30-minute consultation with a real live person. There's a minimum account requirement of $10,000, and there are extra bonuses for American Express high-yield savings account holders. Every year, at the anniversary of your Invest account, you get $15 per $10,000 that you have in savings. It is capped at $75 per year. Someone with $50,000 in the bank is going to get the same cash bonus rewards as somebody with $100,000 in the bank. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good, and of course subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. Additional features include bonus American Express reward points. Those bonus reward points start when you have $50,000 in investments, but they are tiered. First, you get 5,000 points if you have between $50,000 and $100,000 invested. If you have between $100,000 and $500,000 invested, 25,000 points, and anybody who has above $500,000 invested gets 50,000 points. Of course, there are some pros and cons. I feel like it's good to be rewarded for saving rather than spending. A lot of these other credit cards that partner with investment companies, whether Charles Schwab with American Express or Fidelity producing its own credit card, you typically get cash back on your purchases. In this case, you don't actually have to spend any money to get cash back. You get cash based on your investment balance, and then you get some additional rewards based on what your savings balance looks like. Another positive that I found is that you don't actually have to have a credit card in order to redeem those points. You can redeem them if you also have a debit card that is linked to an American Express checking account. But on the downside, the biggest con that I found is that you have higher costs than other financial advisors and robo-advisors. For example, Merrill Edge, which is the broker that I use, currently charges 0.45%. And if you are a preferred rewards member, you can get a discount that ranges from 0.05 to 0.15%. I already made a video on this topic because I used to have Merrill Edge guided investing. If you're interested in checking that out, I'm going to link it in the description box below. There are also robo-advisors that charge charge less. You can either go with Vanguard's own robo-advisors, or you can go with the robo-advisors at either Betterment or Wealthfront, both of which charge 0.25%, or E-Trade, which charges 0.3%. In conclusion, this may not be worth it. The biggest reason is because you can access the same service for less directly through Vanguard, which is normally 0.3%. But there are always some exceptions. For instance, there is no fee for the first 90 days. Perhaps you can speak with an advisor and cancel, which isn't really a pro because you can do the same thing by going directly to Vanguard, because they're not really offering American Express members that many advantages outside of the bonuses you get directly on your American Express accounts. The services are nearly identical for more money. But if you're an American Express super fan and you feel out of your depth with saving and investing, and you would otherwise mess up your own accounts, it might be worth it to have a conversation with them, because it is much more costly to make a huge financial mistake than it is to pay for good advice. I did some math to support my conclusion, and here it is. Even with enough in assets, maxed out rewards come out to about 50,000 points plus a $75 annual credit on a $500,000 portfolio and a $50,000, say for example, emergency fund if you had that liquid. Combined, that is worth approximately $575 a year. I am being very generous here in assuming that the 50,000 points are worth $500. Ultimately, that is still significantly less than the $2,500 in fees that you would be paying in order to access that service. But there are some warnings that I want you to pay attention to. I decided to read the fine print so you wouldn't have to, and here is my takeaway. Expense ratios still apply. That's nothing new. Nobody's going to sell you a fund for free just because you are paying for the advisement services. That is relatively common, but you have to remember that it further increases your costs. So if you have a fund that is another 50 basis points, you are potentially looking at a combined 1% cost between the advisor and the fund expense. It's also very important to remember that this is only valid for taxable assets. This excludes IRAs. If you had a sizable IRA rollover thinking of moving it to Vanguard, that does not necessarily qualify you for those bonuses. They make it very clear that only taxable accounts are the ones that qualify for those bonuses. But I also noticed that there was no mention of 529 educational accounts. Even though they didn't specifically mention it, I would mentally prepare myself that those would be excluded as well, because technically those are not taxable accounts. But the final warning that I want to give is that churning is highly discouraged. Your rewards can be clawed back, and you actually run the risk of losing your other American Express accounts. Let me show you exactly what the fine print says specifically to that area. Here's what it says. American Express may not credit the cash bonus, may freeze a cash bonus that has already been credited, or may take away the cash bonus if American Express determines in its sole discretion that you have engaged in abuse, misuse, or gaming in connection with the offer in any way. American Express may also cancel your high yield savings account and other accounts that you may have with American Express if American Express determines that gaming behavior has been shown. In addition, because American Express needs your high yield savings account to be open to credit your cash bonus, American Express may not issue the cash bonus if you close your high yield savings account within 12 weeks after your invest anniversary. Your balance may decline, but the high yield savings account must remain open. So you have been warned. Unless you are truly committed to this, it may not be worth the effort of trying to churn this and running the risk of losing your existing American Express accounts. As promised, here are some resources for you. You can follow those links and read up on what I just discussed for yourself. The first one is the Invest product homepage, the Schwab branded American Express credit card, and finally the Vanguard personal advisor page, where you can see that all of the features are nearly identical. But before you go, I would like to hear from you. Share your general feelings on the matter. Have you heard of this product? Are you interested in it in any form? In general, do you think it is a good or a bad idea? Leave me a note in the comment section below. I look forward to hearing from you, and I will see you in the next one. I would like to continue sharing my thoughts on all things money with you. So I would appreciate it if you could help out the channel by liking this video and sharing it with anyone you think might benefit from it. If you want to see more content, be sure to subscribe and hit that notification bell so you can know when new videos come out. I'll see you in the next one.